Unlocking higher credit limits. Think like a lender. Why your credit card limits are stuck at $500 when others have $10,000. The hidden timeline rules every bank uses but won't tell you. How your total debt secretly blocks your approval for more credit. A legal trick to instantly show banks you have more income. Why using your card the wrong way keeps your limit low. Section 1. Stop guessing and start knowing the rules. Banks have strict, hidden rules for when you can ask for a higher limit. Requesting increases randomly or too often can hurt your chances. Each bank has its own timeline. For example, you can ask Discover for an increase after 30 days, but if approved, you must wait 180 days to ask again. Knowing these rules lets you ask at the right time without being denied. Section 2. Your secret weapon, debt-to-income ratio. Your DTI number. Your debt-to-income ratio is your total monthly debt payments divided by your gross monthly income. Banks use this to see if you can handle more debt. A high DTI, even with a good salary, signals risk. Pay down your card balances before requesting a limit increase to improve your DTI and show the bank you are not overwhelmed. Section 3. The household income hack. You are often allowed to include the total income of everyone in your household on a credit application. This includes a spouse, partner, or roommate whose income you have reasonable access to. Adding this higher household income can dramatically improve your DTI on paper, making you look more qualified for a higher limit. Section 4. Build a ladder of comparable credit. Banks look at your other credit cards to decide your limit. If you only have cards with $500 limits, a bank like Chase is less likely to give you $15,000. First, build a strong relationship with a lender known for high starter limits, like Navy Federal or Apple Card. A high limit on one card makes other banks more willing to match it. Section 5. Be strategic with soft and hard pulls. Always try to get a credit limit increase with a soft pull, which does not hurt your credit score. Banks like Chase, American Express, Discover, and Capital One often use soft pulls for increases. Avoid unnecessary hard pulls from banks like USAA or PenFed, as too many can lower your score and make you look desperate for credit. Section 6. How you use your car matters. Some banks need to see heavy, responsible usage before giving an increase. For example, if you have a $5,000 Capital One card but only spend $100 a month, they see no reason to raise your limit. Use the card more, but pay the balance down before the statement closes to keep reported utilization low. This shows you need and can manage more credit. Section 7. Your action plan for higher limits. 1. Update your income in all banking apps to reflect your current household income. 2. Track when you last requested an increase and follow each bank's timeline rule. 3. Calculate your DTI and pay down debts if it is over 30%. 4. Identify your soft pull banks and request increases there first. 5. Increase spending on cards from banks that reward usage, then pay off promptly. 6. Move a direct deposit to a bank you want a stronger relationship with. 7. Request a soft pull increase today on an eligible card. Final summary. To raise your credit limits, stop applying randomly. Learn each bank's hidden timeline rules. Lower your debt-to-income ratio by paying down balances and using the full household income on applications. Build a history with one high-limit card first. Always prefer soft pull credit limit increases. Use your cards actively but report low balances. By following this strategic plan, you can systematically increase your limits from hundreds to tens of thousands of dollars.